For a deeper inside look on what the latest jobs data means for the Fed and the U.S. economy, let's get right to ADP chief economist Nela Richardson. Nela, as Rick said, when you think about the tight labor market, that has really been one of the biggest hurdles for the Fed and its attempt to cool off the economy. What do the numbers today tell you about how much more the Fed needs to do to get it where they want it to be?
Hi, great to be with you. Look, the Fed may not be able to go through the labor market to get to lower inflation. I think that's what the numbers tell us today. We're seeing really steady and robust job gains. The BLS report today was pretty broad-based, a little different than what the ADP numbers showed earlier this week in terms of the broadness of the hiring. But in terms of the number of jobs created, we showed 239,000 private sector jobs. BLS, it was 233. So you're seeing the same kind of alignment when it comes to these monthly job gains. For the Fed, that means that it's not the labor market that's seeing weakness. It's things like housing and maybe stocks, but not the stock market today. So they have their work cut out for them.
Yeah, it's been interesting to see the reaction. In the past, we've sort of seen the strong jobs numbers kind of lead to declines in the broader market. Put this in context for us right now, because you said, look, it's not necessarily the labor market that the Fed has to deal with. It's other areas like housing. Are there other levers that you think the central bank can be pulling when you consider that the rate hikes they've implemented so far haven't necessarily led to a significant cooling off of the labor market?
The Fed has fundamentally one move, and that's rate hikes. Unfortunately, they can go faster, they can go slower, but they're still going to hike rates. I think what we are anticipating, at least I am, is that not just that they hike, but that they hike and they stay at an elevated federal funds rate for a period of time to bring back inflation. The bottom line is, when you look at the labor market, when you look at consumer spending, this is a long game for the Fed. It is not a short game. And that means that rates are likely to stay higher for longer than was originally anticipated by the Fed.
Wage gain is certainly something we've been keeping a watch on. As we know, so many companies have had to deal with the higher costs that have come with a very tight labor market. Hourly earnings up 0.4% in October from the previous month. We are seeing a slight cooling down, if you can call it that. But what are you hearing from employers who are saying, look, we can't necessarily fill the jobs, but maybe we don't necessarily have to dangle the same incentives we did 6 months ago?
Well, ADP pays 1 in 6 workers in the United States. So we have a lot of payroll data. And when we look at pay growth, what we're seeing is exactly what you see in this BLS report. It's exactly what Powell pointed to in this press release, that wage growth is slowing, but it's slowing to and stabilizing at an elevated level. It's still much higher than it was this time last year. So wages are not likely pushing up inflation, but it may keep inflation prolonged at the current level. And what we're hearing from our clients, especially our small business clients, is that it's still a tough time finding qualified workers, especially in consumer-facing industries like restaurants, leisure and hotel accommodations. And so there's still a struggle here for the smaller firms who were outcompeted by larger firms earlier on in the recovery. Now is their chance to hire as some of these larger firms take a pause.
It's been a situation of good news, sometimes being bad news. In this report specifically, I guess that the bad news that could be good news is that unemployment did tick a little higher. We're talking about 3.7%, which is still historically pretty low. I mean, how much higher do you think that number needs to go in order to see a real cooling off?
Well, I focus on the real economy, on the jobs market. So good jobs numbers are good news always. And I think the unemployment number, we have to put it in context. It's still below 4%. It's still at historical lows. That number is coming from the household survey, which is a little less reliable. That number, the 3.7%, is likely going to tick up back and forth over the next couple of months. But the punchline here is that we're still seeing job gains. And if you match that data to the initial jobless claims numbers that are still around pre-pandemic levels, we're not seeing a lot of firms starting to lay off en masse. And that's good news for Main Street. Main Street is the bulk of the economy. So that's good news for economic growth.
Yeah, a lot of the layoff news largely focused on places like tech. We did hear about hiring freezes in places like Amazon as well as Lyft. But we'll continue to watch that. Nela, it's good to have you on today. Nela Richardson, ADP chief economist.